I believe there's some interesting things happening with NIO, but there's also some risk in the market. I want to talk about those during this video, and I also want to make sure if you haven't started a position, if you've been avoiding all China-based stocks, this might be one you want to reconsider, especially if it gets into that risk mitigation level of that $18 range. Now, I want to talk about something during this video that I don't believe anyone's talking about, and let's get straight into it. Let me show you what I got pulled up. In the latest trading session, NIO closed at $17.98, and prior to today's trading, shares of the company lost 24.47. Now, this was published yesterday, so of course it surged about 12% based on these higher oil prices and the fact that investors might be hopeful that there's strength as the next earnings release approaches, and that's going to be March 24th. Now, let's take a look at what the analysts are expecting. We've got 7 analysts, and we've got an average low and high estimate of between 1.5 and 1.59 billion. A year ago, sales were 1.03 billion. Sales growth year estimate, this is going to be 49.6% growth if they hit that. Now, it's an open book test. This is an easy test to take because they give you the numbers. We've got December numbers here, and we've got the Q4 numbers. This is what we want right here. And you can see 25,034 vehicles. We've got 44.3 year over year, breaking a new record, right? High quarterly delivery versus the company guidance, right? But does that matter? Does company guidance matter, or does analysts' price targets matter? And that's what you have to pay attention to. So I don't like going into these earnings holding a position if I don't have a really good low cost average, or if I don't want to be shocked by a decrease. Now, anything could happen going into earnings. I'm not saying that it's going to drop just based off of missing one number, but what if you miss a couple, or what if guidance gets changed because of other factors? And we'll take a look at what some of those could be. Now, low, I think you're mitigating your risk, and that's what I like to talk about is if you're in the $18 range, if it revisits this, and there's a number of reasons why it could. You can see February 24th to the last 4 trading sessions, 1, 2, 3, 4, it's been in the $18 range, and I'm not surprised to see that it did surge today. You can also look at January, and you can look at February numbers that they keep publishing these year over year to kind of calculate to see if they're on track to complete the next quarter, so you can continue to anticipate that momentum with the company. Now, automakers should be concerned about the rise of metal prices as nickel price spikes to 250%. And nickel's used not only in batteries, but they're used in metal. So that is also a concern if you're looking more long term. Now, overall, the market was green today, but energy sector was red. So things flip flopped. And I would say that it would be a good idea to make sure that you're looking at oilprice.com and keeping up with what's happening with these oil prices. Now, for March and March only, you can get up to 5 free stocks and 1 additional guaranteed free NIO stock if you sign up for a MooMoo account. That's all you got to do is just sign up, deposit $1. So if you sign up, you get 1 free stock that's up to $3,500. If you complete the deposit of $1, just one single dollar, you get a free stock and an additional share of NIO. Now, the reason I like MooMoo is because it's got free level 2 data, absolutely free. So for $1, you get free level 2 data. You get to trade on multiple exchanges, Singapore, Hong Kong, China, and you also get those extended trading hours. So be sure to check that out. So how might you get NIO in the $18 range again? Tomorrow, we have 7.8% is what the economists expect for the CPI numbers to hit a new 40-year high. So if this comes in at 7.9 or anything higher, you could see some volatility in the market. It might not happen right away, but it could happen later in the market after the market opens. It just depends. So this is going to come out at tomorrow at 8:30 in the morning, and I'll be monitoring that to see what that is. Now, the next thing I wanted to make sure you know about is March 15th to the 16th. I wouldn't be in a rush. You could also see some volatility during this period. So keep this on your watch list as the Fed does take those CPI numbers and takes the labor market numbers and decides to take action. And hopefully the Fed does still decide to take action. The Fed's got to do something. So no later than March 11th. Now this is this Friday. So this Friday also, Russia began active preparations for disconnecting from the global internet. No later than March 11th, on the servers and domains must be transferred to the Russian zone. In addition, detailed data on the network infrastructure for the sites is being collected. Now, they have been working on this and putting some money in it for quite some time. And the following week, there might be some type of cyber disruptions in the United States or globally as they take their self offline. So it'll be important to see what happens there. There's an article worth reading by MarketWatch that talks about the death cross pattern for the S&P 500 is nearing inflation fears. Be sure to check this out. The Dow and the NASDAQ composite have already produced death cross patterns. So this one is definitely worth looking at. And then politically, the GOP House leader with Iran and oil from Venezuela, just to offset Russia, paying other dictators, this is going to become a political mess. Of course, they're going to have to fight back and forth because nobody in Washington can get along to get anything done. We could use better leadership across the board. So talk about a recession. You're going to hear everyone talking about a recession, and that the NBER is what you want to pay attention to because they will officially announce when there is a recession, if there is one, and unemployment rate is directly contributing to that. And of course, high oil prices can also impact this, but we do have a strong, healthy economy. So I don't see that being something that we have to be worried about quite yet. Now, the calls for NIO are definitely worth paying attention to, especially this week. Very, very bullish sentiment. Now, I would not recommend buying any calls unless you know what you're doing. The same week, I would always push these out as far off as possible. That way you have room to maneuver. And the next thing that I have pulled up for you is that price to sales trailing 12 months. Look at it, 6.72. And historically, this has just been monstrous. And if you thought about buying NIO in the past, and now would be a good time, I would say, in that $18 range. Let's take a look at what TipRank says. We've got a low of $30. That means 12 months from now, you can expect a $30 price target. Now, of course, that could come a lot sooner. And this is talking about 160% upside if this gets to that average price target of $52. Now, I wouldn't be surprised if there is further concern about the supply chain and cost of goods, commodities specifically, that analysts downgrade this and it gets closer to that $30 price target. So just be aware of that. So in the short term, vehicle auto manufacturers might feel some pain. In the long term, as more competition comes to the market, let's take a look at the numbers. Now, revenue, quarter over quarter, it's looking good. We've got good gross margins that are also climbing, but right here, R&D expenses are sailing upwards, and also it looks like we've got climbing selling, general, and administrative expenses. So watch those operating expenses. That might be something that analysts are not favoring, even though we've got a solid balance sheet, but also dilution of shareholders and anything else that the analysts could come up with. That's all I got. Be sure to do your own due diligence. If you enjoyed this video, give it a big thumbs up, subscribe to the channel, and I'll see you in the next one.